What's going on? What's going on? Oh, sorry about that. Welcome back. Welcome back to another episode of Take Profit Tuesdays. And I'm your host, Levon Stewart, CEO, founder of Vonnie FX. And this week, guys, before I even start anything before I even start the disclaimers, I just want to say, for those who are, support my channel, for those who actually watch the weekly uploads, those of you in my Discord, those of you in my WhatsApp group chat, the team itself, I just want to say I'm greatly grateful for every single last one of you. Again, this is my passion. This is something I take serious, that I want to take even more serious. And yeah, man, if this is something I definitely want to pass down to my kids, or if this was a job, if this was something like I had no legs, arms, but I could still, and not do analysis and be able to speak to you guys, and pass on this information, yeah, man, this would be like the probably last thing I'll do to the day I die. But anyways, as always, we like to start at each and every single video. Again, guys, this video is not this video or channel is not financial advice. This video is strictly for entertainment / education or education. So if you're looking to invest into the markets, I would recommend you look for your local, or one of those major financial brokers, or trading firms, or an advisor, someone who's licensed with a Series 6, Series 7, or a 69, or someone who's, or institution that's regulated by the SCE or the FNRNA. So those are the people you want to put your money into, so they can manage your money. So when it's time for to collect fees, commissions, you'll be paying their salaries. Whereas here in this channel, we teach you how to do it independently. We kind of put some little bit more entertainment on the side, whereas my jokes. We kind of a little bit more, a lot more education. And again, if this is your first time tuning in, as we always do every single week on the show, we talk about the trading account that we're gonna grow into, guys. So as again, if you're just not tuning in, if you see these price tags, these are price tags that I bought. Right? We talked about these in previous videos. Again, I don't like to repeat myself on a lot of talking points. Again, I'm just gonna go over what happened last week. And again, our goal is to go have a trading account. I think I'm gonna do, I don't know, probably like 3,000, I don't know, probably 5, 10, we'll see. But that's the goal, man. We want to really teach people how to invest now, and then as we grow this investing account, maybe we might split the account half, 50-50. Maybe I might have some money on the side. I don't know. I can't really tell the future, but guess what? I'm gonna tell you what we're gonna plan to do once we get to our goals. So in that case, we could do trading as far as shorts. Right now we're doing buys only. So we're showing you how to put your money and just park it. And as prices get low, we're going to teach you how to buy good prices, and to exit out at good prices as well if you choose to do so. So yeah, just to wrap things up. Or should I say a recap of last week? So again, if you watched last week's video, and I'm gonna highlight where we were when I did record the video. And again, if you're just not watching this, sub to the channel. We do this weekly, to find good positions to park your money. You know what I'm saying? Get some, profit. So about last week, I think we were. Oh, let me get that thing off. That's not what I wanted. Hold on 1 second, guys. Last week we were about almost at the bottom, basically. Right? And the interesting thing about that is that more likely than not, we were thinking that price could reach lower lows, right? And what you guys have to understand, that price moves in waves, right? So a lot of times, more than not, and it could be, I hate to sound pretty chaotic, but a lot of times it's waves within bigger waves and more bigger waves. Think of it like a school of fish, right? and you're in the ocean, there's many schools of fish. Let's say small schools of fish, right? As they join together, they gather. One school of fish collides with another fish, make a larger school of fish that consumes other small schools of fishes, so on and so forth, to the point we have a massive school of fish, right? And everyone's following each other, which causes huge momentum, right? And one thing you have to understand that is that when these waves accumulate, meaning that they're either gonna continue that direction or change direction, you really have to understand that these can't make you fearful a lot of times, and you have to be very patient. Guys, there's a lot of times where you might see price get ridiculously hot, and you're like, ah, snap, I really need to get to this buy like ASAP, and then the next day it sells off, and you're in the negative, right? So on and so forth. Or you see what happened to me last week. Funny enough, and I'm gonna get to this buy position. Why I got into my buy, literally a couple hours ago. Like what happened to me last week, and I remember I was saying this in the live stream that because even before last week I got into another buy because it did a dip, and I knew it was going to drop even further. That's why I got into that buy. And to be honest, again, if you watched last week's video, we talked about the Fibonacci, and I still left it up there for you guys to see. I think I moved the arrows, delete the arrows, because we had no need for that. So what we see that from last week, that I was expecting a lot more consolidation as far as price moving sideways. You know, I had some money coming in, so on and so forth. So I was definitely gonna get into a buy at some point. But one thing I did notice Sunday / Monday before the market, because again, if you're doing the S&P futures, a lot of times you could see the prices fluctuate around Sunday around 6 p.m. when other countries' markets are open, foreign exchange open, and you could see price accumulate, because last week price kept on going up. That following Monday, after I did the video, excuse me, not the following Monday, the following that week after I did that video. So I said to myself, I'm not gonna get into a buy if price is gonna keep going up. But yeah, it was 4 consecutive days of the bulls, and people thought the market was gonna recover, right? Surely not. But it took a huge cutoff, or not a cutoff, a correction. And what a correction is, guys, is that if price is overextended, right, or if it's dipping too low, or if it's raising too high, it has to come back to where it was. Like as they say, anything that goes up must come down, right? You probably heard it a million times, right? Which kind of puts us in a better position for the next buy, right? That's why when I was at work, I was checking the prices. I'm like, oh, S&P dropped what, couple percents, 1-2%, whatever the case may be. And I said to myself, oh wait, wasn't there like a huge bull run? So I pulled up the chart. I see. I'm like, oh, it's back in the zone that we talked about, the golden zone, right? So now what's the next couple of plays? And again, guys, like I said, I'm not a financial advisor. I got into a better buy position than I did the last time, because again, I thought I was gonna miss it. As you can see right here, this whole rally, and I was not buying off the rally. I'm not buying off because I'm not gonna buy at a higher price. And if I did buy at a higher price than here, I'd wait till some kind of formation says or shows me that guys, we expect prices to be very bullish the next couple of days or whatnot. Then I would change my sentiment. Granted, right? So I just want to add that like the 4 pillars. I'm gonna reiterate the 4 pillars again in the stream. The 4 pillars, man. It's literally the only. I wouldn't say it's the only way, but if you want to be on my team, you want to learn my philosophies, the way how I trade, how I take my time on these trades, and do it confidently. Not just by myself, but with my team. You have to understand the 4 pillars. And again, I believe that those who are not a part of my program, again, whether it's the one-on-one trading, whether it's the signal service, or even the crypto management, you're doing yourself a disservice, because you could see that each and every single week as you're watching these videos, as I'm breaking it down in front of you, and we're going to talk about a short little article in a moment too, that the only way is to learn. The only way is to invest in yourself. And in order to invest in yourself, you really have to put the time, money, and effort into that. So again, I'm going to reiterate the 4 pillars. Pillar number 1, capital. Pillar number 2, strategy. Pillar number 3, risk management, and last pillar number 4, psychology. So, and I'm gonna break it down how those 4 pillars help me out. As always, guys. As number 1, the only way you can get into trading is having capital. Again, if you don't have money in your bank account to start trading, if your funds are not there to be, put some money aside, whether it's 10, 5, at least get your feet wet. Because again, you don't have to be a millionaire to start trading, right? We live in these times now where a lot of these brokerages, they're literally letting anyone open an account with no money, right? So that's a perfect opportunity to say, all right, man, I gotta, out of my $800 check, I need to put at least $100 to the side so I can start investing, right? You need to take that serious. And that's very, very important because, again, you cannot even start investing without any kind of capital. You can't even buy a house without capital, right? So, again, you need money to invest. Pill number 1 is, obviously, all the pills are very important, but to get things going, you need to have the capital, is what I'm trying to say, right? So, now pill number 2 now, strategy. So, talked about this plenty of times in a lot of other videos, streams, that depending on your lifestyle, guys, we're not all the same type of traders. We're not all, Lee, I can't come on the charts every single week. I'm always watching the market. I see so many opportunities in the markets, man. I think I should be a day trader or something. Okay, cool. Put an hour or 2 out of your day, and I would definitely start trading at the most volatile times of the markets. That's something you have to research and do. I already know what it is. And then start doing that and have a schedule, have a plan, which I'll talk about. Well, have a plan, have a strategy of how you want to, trade. What strategies? Well, there's also little increment parts such as the technical strategies, the fundamental strategies, which is what we talk about. And that's gonna help you, with the capital that you have to start trading and managing your money a little bit better, right? Of course. At some point in time, when someone teaches you things, you have to take it and adjust it to your own lifestyle, which is fine. But again, it's your strategy. Again, at Volume, we do teach different kinds of strategies, such as the intraday trading, swing trading, investing, so on and so forth. So again, that's very, very important to have. Now, when I think about risk management, a lot of times people think about like insurance, right? The insurance. So if things go bad, if things go south, what's the my loss or what's my expected recovery, right? And I'll tell you a quick story, and I'll be vulnerable too. A lot of times when I first started trading, I used to trade with no stop loss. So a lot of times when I had a little $200, $300, whatever, $100 account, and I'll just be investing in God knows what, USD or Bitcoin, I'd have good days, but guess what? I had a lot more bad days. So a lot of times I'll just blow my account and call it a day and jump back in it again. And thank God to pill number 4 that kept going. But pill number 3 is the risk management, guys. And again, everyone is different as far as the strategy with the risk management, but you need the risk management, guys, because again, you're gonna have some kind of news, you're gonna have some kind of whale, some kind of big order push in, a huge sell-off. I can't predict the future, but it's happened in the past, and not to say it's not gonna happen again, but hey, it might happen again. And the best way to at least combat those kind of things is to have the risk management in hand, right? So I'll tell you my risk management. I generally do 1% per trade, 1% risk per trade. I'm gonna say it again, 1% risk per trade. Oh, Lee, how is a 1%? How does that work? Oh, simple, guys. You see that account balance that you have when you open your trading account? You take that, times it by 0.01, right? You take that number, and that's how much money you're gonna risk that for that trade. There's a calculator I could show you, but again, those are for my members. So again, if you want to learn how to do your proper risk management and do all the 4 pillars, DM me, send me a message, get a part of the team, get some training, and we could show how to do that one risk per trade. Now that's a very conservative approach, but now if you're someone else who wants to take a little bit more dive in more details and be a little bit more aggressive, obviously gonna increase it. And then lastly, um, psychology, guys. So again, you gotta have the psychology. All these four pillars do not work without psychology. All right, and I think the psychology is like the glue that puts everything in piece that makes it look perfect. And the reason why I say that is because again, guys, you're gonna have I'm gonna be honest. So if you're a beginner, you're gonna lose a lot of money, right? So now, if you're a real avid learning trainer and you want to take this serious, you need to know that you're gonna lose a lot of times, and that the days that you win, you're gonna have to cherish those days and do better to get those more consistent wins, right? And that's just the name of the game. Anything you do in life that you want to succeed in, you really have to work hard and put time, energy to perfect it to do better. Think of like athletes. You know what I'm saying? They put a lot of time in their body, their athleticism to be the star player they can be, to be those professional players. And I'm damn well sure they have some good psychology when they're playing, especially when it comes to paparazzi, the drama, this, down the third, the outside influences. That's why you have to have the psychology, because a lot of times in life, there's things that are outside your control that affect you. And what people do a lot of times, they complain. They're like, oh my God, this and the third. Well, how about this? How about you control what you have in front of you? What's in your influence? For instance, right? Let's say, you go to work and you're always 5-10 minutes late because, you don't prep the night before, which as far as, food and stuff. So at some point in time, your boss is getting reported that you're coming in late every single day, which is slowing down the productivity of the overall job that has to be done. So, again, even though you're not in control of the overall job that has to be done that other people have to do, you're still the key link that there needs to be more cautious of what they're doing. So, what happened is, your boss takes you in the office, he sits you down, and he's like, hey, man, you're coming to work every single day. Things are not getting done on time. I might have to fire you if you keep this going. And then you sit back like, man, are you serious, man? Like, I'm trying my best. I'm coming to work every day. It's the traffic, man. It's the traffic. I can't do anything about the traffic on my way to work, man. And you're just complaining to him. And your boss is gonna look at you like, hey, man, listen, that's not my problem. You're here. It's supposed to be at 8 o'clock. You always coming at 8:10, 8:30. Get here on time where you're going, and he's gonna close the door, and that's it. So now, if you're someone who doesn't have good psychology, right, what would you do? Oh, sorry, I'm relating psychology to being a smart person. So if you're a smart person, right, you have good intelligence, you have a good mindset, right. Well, sorry, if you're a bad person, you don't have psychology, you're gonna think, you know what, man, screw that guy, man. My boss don't. Now, if you're someone with good psychology or good mindset, you're gonna think to yourself, all right, let me take a step back. Let me not get into my emotions. Let me see what's happening in the crib that I can work on. Oh, okay, I have extra time after work to start doing meal prep. So now, if I take time out the day of my afternoon, I will have more time in the morning to get to work on time. I could leave extra 20 minutes, 50 minutes early. So I could not only just show on time, but I could show up early. I'm taking things that I have control of, benefiting the outside world in front of me, because again, I have that good mindset, that good psychology. And that's why it's very important. So again, that's kind of where I was as far as these trades. I know you kind of went 20 minutes just talking about the 4 pillars. But you guys should appreciate it, man. You should definitely appreciate it. All right, let's talk about economics. So shout outs to Brooke Diafama. This one's titled Inflation. Grocery prices in August rose 13%, the highest increase since March 1979. And I feel like we all know the reason why inflation's causing. At this point, I'm gonna say it's the gasoline, because again, a lot of times when in the States, even though things are growing domestically, they start to freight it, or take a truck and carry it out to the local groceries. If gas prices are going up high, that's going to affect the bottom line on the fruits, which also affects the bottom line of the customer who's also going to purchase the product. All right, so let's see. According to the Bureau of Labor Statistics, August customer price index, the overall cost of food rose by 11.4, with the food at home category groceries up 13.5 year over year. For the overall food category, that's the highest increase since May 1973. But for the food at home category, that's the largest increase since March 1973, according to the Steve Reed, an economist at the U.S. Bureau of Labor Statistics. So as you can see from this chart, where's inflation and isn't. So as you can see, rental cars, tech, IT, hardware, and services, they're getting cheaper, right? Because people are not really traveling as much, so they got to make those prices more attractive. Whereas airfare, people are traveling, overseas. People still want to go out, do stuff. Gasoline's going up higher as expected. And they talk about the food at home and transportation. So yeah, guys, keep in mind, because we're here to save money. So we have, as far as what jumped in price the most, retail Yahoo finds prices are moving sort of broadly together. There's not a lot of huge amount of really noticeable jumps or declines compared to some other months. So again, this kind of goes back to where this might be our norm until I guess the feds do something about it or the war is over. On a 12-month basis, cereal and bakery products led to a spike with an increase of 16.4, higher than on year over year. With flour, prepared flour mixes also higher, 23.3. In part, this category is impacted by distributions in game markets caused by war in Ukraine, which I just talked about. So I'm not gonna really go too much in there. Just want to give you guys a little brief overview of how the inflation is impacted. Let's go over DXY. Oh yeah, there was another article I wanted to talk to you guys about, but I didn't send it to myself for some reason. But long story short, the Feds they're planning on doing another rate hike coming in probably like a week or two. They're planning on doing 100 basis points, which is another percent, I believe. So yeah, guys, just be on the lookout for another rate increase. If you're trying to get a loan, mortgage, or buy property, or finance that property, you better get it now before they increase the rates. Now as far as the dollar, now the Feds, you guys have to do a lot better. A lot better. I mean, I appreciate the fact that the dollar is now valued more than the euro. That you could take €1 and get less than $1. The 1-to-1 pair is gone now, guys. So you need if you want to if you convert €1, you're gonna get 99 cents. So yeah, but this huge spike that we might see things come back to normal range maybe in the next couple of months or so. But right now, I'm expecting sideways, and then hopefully it takes a dip. That's what I'm hoping. Will it happen? I don't know. But like we talked about in past videos months ago, the Feds they told us their intentions with the rates. They're aggressively gonna start attacking the rates, or aggressively gonna hike the rates just so they could get things back to normal, and they're gonna keep doing it till things get back to normal. So I really hope they could get it done, because to be honest, guys, I miss when things were back to normal. I really enjoyed going out, buying things, traveling, getting my gas. I don't have to worry about paying like $5-7 for gas per gallon. Things are pretty easy. But now it's just like, you gotta be careful, gotta count each penny, gotta stretch the money, gotta live differently, which is okay. Which is fine. We're humans. We have to learn how to adapt and adjust, and how to, live, move through these waves. Because things will get better in the near future. When? I don't know, but it will get better soon. But anyways, yo, again, if you're just not coming in, like the video, comment, subscribe, and guess what, guys? I'll see y'all next week. Peace.